That was fine.
This morning? No, I didn't get you guys this morning.
Somebody walked away then. Okay, give me 1 second here, JT.
Come back.
So Hank is our vice president. Todd is our treasurer, a real banker. Denise Rainey is our secretary. Sharon. I gotta look closer. Well, when you get my age, you can't see and you can't hear, so you need help from everybody. So, Sharon, then we have Scott, where are you at? Scott and Sharon work together on the education. And then we have Kirsten has rejoined us. Thank you, Kirsten. And our newest Cooper Anderson. So, anyway, with that going, Matt and Todd are going to get us going with our video. And then I'll let David, is it Dinerman or Dinerman?
Dinerman, yeah. Dinerman, yeah.
Well, I didn't know if we were dining or if you were dinner.
Dinner, I know, I get Dinerman most, but yeah.
Are you ready? We'll get going with the program.
You can continue. Give me about 2 minutes here.
Okay.
I gotta get caught up.
JT, you got a joke? Take us for 2 minutes.
There's coffee. That's a joke. It's late.
That's what let's do. This is the speaker. We have Dan Martinez from Farmers Insurance. We have Kayleen by title who bought our breakfast this morning. Thank you very much.
Thank you, Kayleen. Awesome.
And also, I want to thank Kirsten for putting this great speech together for us. And changing us over to Friday, so it's a little change going on this year. Anyway, where did you go? You got a joke?
No, there's nothing funny about you.
I have a joke.
We have officially switched to Fridays now.
Pardon me?
No, wow.
Just because of the library today, that's why we've done that.
Okay, well, I was just curious.
Yeah.
I think it's just for now, but the potential switch if everyone likes Fridays.
Dan, why don't you come on up and say a little something, and then Kayleen can come behind you and we'll recognize you folks for helping us out. You can
Okay, that's enough.
you can work your business there.
Well, good morning. Happy New Year, first and foremost. Happy 2029. I'm sure everybody's excited for a new chapter, new year. With that said, I went through a little bit of a thing in my office, and I invited sheriffs and service masters because they came in and they helped me with my liability exposure. We had a COVID exposure in our office, and they came in and sprayed from top to bottom to make sure I limit my liability exposure to my clients, to my staff, and to myself and family. So that's really what we do as an agency, is kind of digest your business, whether it's owning the commercial business, whether it's the business that's inside the commercial business, or any other exposures to third parties, and kind of see how we can assist with your clients or you in making sure we limit those exposures as best as we can. So if we could ever be of assistance, we have a lot of partners that are in this room to make sure that we're assisting them. Football this weekend. So kind of Chiefs, Mahomes is nobody without who? Kelsey, Hill, everybody. So we are definitely investing in our community here locally and making sure we have good partners that help making sure if there's ever a loss that we're taking care of you guys firsthand too. So if we could ever be of assistance, we're on the north side of Prescott Valley, across the street from Marvin's Market, but we'll come to you guys here in a second. Thank you guys.
Thank you, Danny.
So Brady.
I wanted to introduce Casey Baker, who is an escrow officer in our downtown office, along with her son Lance. We do start training very early. wherever your property is, Yavapai Title's there for you. If you need anything, give us a call. We've got some masks, hand sanitizers, and some chapstick, COVID-related items. So please help yourself. And if you haven't gotten breakfast, please get some, because I've only got a 14-year-old son at home right now, and he doesn't need all of that. So help yourself. Take leftovers. Thank you.
Thank you.
Thank you, Kaylee. Just a couple of announcements before we get ready to bring our speakers on. The dues are $60 a year, and you can pay them right up here at the front table. And with that, you get, now are we gonna get, Sharon, are we gonna get a full 24 hours credit this year?
Well, okay, here's what's going on. We have, should I go up here? Oh, it's a blank screen anyway. We have 3 of our 4 classes set. So we have almost the 24 credits that we need, but we had one instructor that we really wanted to use, the guy that does the Jeopardy style, and he wasn't responding to my emails. And finally, I got a call from Phyllis over at Stewart University, and Larry died of COVID. So they are trying to figure out an alternate way to do classes. They want to do like outdoors or something like that. So she's working on giving us someone that can teach a class for the disclosure and the fair housing. So that's the one that we're missing, and it'll probably be later in the year. We're trying to push everything back into the second half of the year, just so that we can have live classes, hopefully. So that's where we're at.
Good, thank you. Also, did everybody get the membership roster that was sent out? If you know of any folks that have changed their addresses, changed specifically painful there.
Please get an email about this, email me.
Is there any other announcements that ought to be bought before the group? I guess you know why we're here, because Yavapai has asked us not to use their room for a while till the pandemic lessened somewhat. But this is a great venue, I think, and everybody can spread out and not be too concerned about the COVID. Matter of fact, my wife and I have been on the wait list here for a month. We saw something on television Thursday morning in Phoenix, and we signed up and we got our shots yesterday. And it was like you drive into a parking space, they come out, take your information, give you a shot, have you wait 15 minutes, you're done. And we'll be back up here in an hour and a half. So that's so bad. That's pretty good. Any other announcements from anybody?
Are we doing marketing afterwards?
We'll do marketing afterwards. If there, I don't know, everybody said think slow. I may not be any marketing. We can tell jokes about it. So anyway, I introduced Todd, introduced David. Where did you go, David?
Here in the back.
Oh, well, probably better come to the front if you're going to speak. You guys can tell a little bit about yourself if you would like, kind of where you're at, what you're doing, what your position is.
Well, to begin, David and I have not had a chance to connect. I think he was invited yesterday or the day before. So we have not had a chance to coordinate any of this. So we'll probably be bouncing all over the board. But definitely we'll be open to questions that we're able to answer, because the SBA programs are always dynamic. So real quick, my name's Todd Hachmann. I'm a commercial lender for Foothills Bank here in town. I've been lending on the commercial side for 15 plus years. We're doing loans, both PPP as well as regular conventional. We're busy as we've ever been. So.
And I'm David Dinerman with National Bank of Arizona. I was with Wells Fargo for the last 16 years, and they did some did away with our business banking group up here and made it a call center, whatnot, down in Phoenix. So anyways, I'm with National Bank now. Like I said, I've been in town the last 16 years or so. And like Todd said, we're doing, you know, a lot of regular loans as well. On top of that, all the PPP loans for a variety of customers. So it feels good to be doing our part to get the money out to the businesses that need it, and they can pay their employees and put meals on the tables and all that kind of stuff.
Hey, David, I do have a question.
Yes.
Did you actually move down to Phoenix and then come back? Or
No,
were
I
you here
didn't.
all along?
I didn't. I was here all along. They,
Okay.
Yep.
Curious.
So I think in the last board meeting, we kind of were trying to figure out a speaker for this month. And there was a few individuals sharing who wanted to hear about the recent changes in the most recent stimulus act that was put to the SBA programs. So we're going to kind of talk to the new second, are temporary with the 7A and the 504. It might be a really good time for some of your clients that are looking to buy to maybe look into the SBA realm for the financing because of some of the reductions or reduction of certain things that they've had on the loans there. So I guess we'll start with the PPP loan. With the most recent stimulus act, they did grant a second draw or a second loan for eligible businesses. The first two really don't come into play for our market, less than 300 employees and the loan amount under $2 million. So those we really haven't discussed much with customers, but the biggest one is a 25% reduction in gross sales on a quarter-over-quarter basis for regular businesses. And that's that 3-month period. So if you're looking at the second quarter, it's April, May, and June, and it would be for that quarter in 2020 versus that same quarter in 2019 that you would compare. If you are a 1099 employee, so just like with the first round, 1099 employees have to apply on their own. They can't, the business cannot include 1099 pay within their W-2. So on the 1099 side, they look at it almost on an annual basis. So we're requesting the 2020 1099 to compare a 25% reduction on an annual basis. So that's a little bit of a tweak. And again, you can get into the weeds on a lot of this stuff. We kind of try and keep it at a high level. Otherwise, you can go down a rabbit hole, and before things are figured out, the program's over. One moment. They did allocate $285 billion for this program. So either until the funds are depleted or until March 31st is how long this second draw is working. As of January 31st, I think they had allocated about $73 billion. So it's not going as quick as the first round. Depending on who you are talking to, people think it will be depleted before March 31st. Some people think it won't. We'll see there. Foothills, we've probably seen compared to our first round, we've probably seen 25 to 30% interest from our prior borrowers in the first round of PPP. Sharon.
Okay, so my understanding was the second draw PPP, it didn't have to be a second draw. If you didn't take it the first time, you could go in now for a first draw,
Yes.
and you didn't have to meet that 25% reduction or anything like that. You just came in, fill out the form, and we now know that it's probably going to be forgiven if it's less than 150,000.
So the application, and I haven't seen the application. It was just delivered, I think, over the weekend to the financial institutes or the end of last week. There was a lot of timelines that were stipulated in the bill that said, hey, you have X number of days to get certain things out, and that No, so there was rumblings of an instant forgiveness, that anything under X amount would be forgiven with probably just an attestation by the borrower. That has not come to fruition quite yet. It does in the future. Yes.
Are these PPP loans to 1099 people such as realtors? That's one of the businesses that would be eligible to apply?
It would be. The calculations on those are a little bit different. When the first round came out, there was not much information supplied by the SBA in regards to what lines and stuff to look at. When they rolled out the second draw, they kind of learned from the first time around saying, hey, here's what we need you to do, because banks were really not sure what numbers were to pull. And so the 1099 employee, since that rolls through your Schedule C, it's actually your loan amount is actually that line 31, which is your net income. So if that's zero or negative, then there's nothing to loan against. So.
Yeah, no, I was gonna say, and that's what I think we've seen a lot of that. I've seen a couple Schedule C employees where they had, negative, net losses. And unfortunately for that particular individual, it would be not eligible.
What about existing SBA loans that have already been paid on for several years? Are they providing, last year they provided 6 months worth of abatement, I guess, on those payments. Is there any news on what the future of SBA payments may look like?
Yeah, I know we're doing some of our SBA customers are getting 3-month deferrals. I'm not sure if that's a national thing.
Yeah, so last year, they rolled out with the CARES Act, Section 1112, which covered 6 months of principal and interest for all of the SBA guaranteed side of the loan. So the 7A loans that are held within the banks themselves, or if there's a 504, it would be the CDC or the debenture side of a 504 loan. So the bank loan still has the regular P&I payments, but the CDC, which is the actual SBA loan, received the P&I payments made for 6 months. With the most recent act, they approved, like David was saying, 3 months for all businesses. Then they took a step back and said, okay, we're going to extend another 5 months to specific industries that have been hit the hardest by COVID. And of course, the number one industries have been the hotels, restaurants, hospitality type that will receive additional 5 months of principal and interest payments. However, this time around, it's going to be capped at $9,000. So if you have a borrower who has a $9,500 a month payment, they're still going to be on the hook for $500, but $9,000 would be.
Is that re-amortized onto the back end, or?
No, it's the SBA is actually sending physical payments to the banks. So the actual P&I payments are being made. So I have a buddy who has an SBA loan, and his lender was telling him, oh, you only get 3 months. And after I did some research, he actually qualifies for additional 5. And his payment's about $7,000 a month. So, I mean, he's going to save $35,000 extra this year because of that extra 5 months.
And so these payments are made by SBA or the government. It's not deferred. It's not, oh, you owe us later, we'll just tack it on the end. We pay your payment for you.
Yep.
Now on a new loan, if someone wanted to come and get a new loan to purchase, say, real estate, could they get one of these and get their payments paid?
Like for the first 3 months or something like that.
Oh, I don't know.
I'm not sure the cutoff time.
So the SBA did roll out this, again, with this most current act. It's really hard because they have stuff in all their guidance that refers us back to the first draw saying, hey, we're following the same here, but we're going to change it here. So it gets a little convoluted sometimes, but it's a government program. So, right now, any SBA loan that is approved from February 1st, and I believe it's through October 31st there. Let's take a quick look here. I did highlight that because I knew Sharon would be asking that specific question. The first 6 months of P&I payments will be made for those businesses. September 30th, I'm sorry, 1 month prior, so September 30th, 2021. And those will also be capped at 9,000 a month.
And rates are so low, so we get a low rate and get 6 months of your payments made. So yeah, good time to get SBA.
However, they do always have the little caveat at the bottom that is available as long as there's still funds in the allocated bucket. So if they start seeing that there's more loans coming on than they expected that are going to have the principal, it does state that the SBA has the ability to reduce, say, from 6 months to 4 months based on what their projections are of how quickly they run out of those funds. So if they say it's 6 months, but they have the little bullet point at the bottom that says we can change it if the funds are going to be depleted.
So this could use for someone wanting to purchase real estate. But
Owner
what are the
occupied.
caveats?
Yeah, owner occupied.
And it has to be 51%, same as a usual SBA type loan?
Yes.
And 10% down.
10%, 15%, depending on the property. If somebody's looking at a car wash, that's going to be a little bit more down because of a considered special purpose there, but definitely not into the equity injection we would look at on a conventional commercial loan.
What is the rate range,
On PPP loans or
SBA?
on regular SBA loans?
Yeah.
Regular SBA loans, what, 4.5, 5?
Yeah, so depending on the loan itself, the 7A, those are done in-house of the banks. They'll underwrite it and retain them on their books for the most part. And then we have a guarantee with the SBA that they'll say, hey, we're going to guarantee, and I'll get to this because Sharon's going to ask that question next, is they'll guarantee a portion. So the rates on the 7A loans are typically set pretty close to what a regular bank commercial loan would be, 4.5 plus or minus depending on the borrower, what the project is, and the strength of the operating entity. Typically, if it's a real estate, you got that property holding company that leases to the operating company, same owners. So all those factors come into play. Now, the 504, because you have the CDC involved and they go out because of this, the CDC themselves are not a bank, so they don't have the deposits coming in that they actually lend out. So actually will go out to the market and sell giant debentures of a bunch of these 40% of the 504 loan or 30% depending on breakdown. They'll sell those out on the market. And because they're selling it out on the market, the debenture rate right now on a 25-year fix, so no reprice, so you're say 40% on a standard 504. Last time we're looking at one right now, and that 25-year fixed is at 2.6%.
Whoa, how do we get that?
Well, that's 40% of the loan.
Right.
So if you did a, typical 504 is the bank does a 50% loan, that's on a normal bank term loan for say, as normal commercial structure, then the 40% would be with the CDC, and that's the portion that would be fixed for 25 years at, depending on when the debenture sells, but right now that's right around 2.6 plus or minus.
Is that the APR or including the fees, or is that just the interest rate?
Just the interest rate.
Approximately what the.
I'll kind of, right now it's really screwy because of the changes that they've done to the SBA. So I'll go and do this before Sharon asks. So a couple of the changes that they've done is from as soon as the bill was signed through, I think this is October 1st, the guarantee fees of the SBA has moved from 75 to 90% guarantee by the SBA. And all the SBA processing fees that are passed through have been canceled and are not being assessed through, I believe, again, October. So, we're looking at a deal right now. Sharon wanted examples. We're looking at a deal right now, 504. Total fees would have been probably around 28,000. But because of the fees that are being waived by the SBA right now, that drops down to about 15,000 of fees being
So about
assessed.
half.
Mm-hmm. Again, it depends on the dollar amount because the dollar amount dictates the percentage that is charged either by the bank or the CDC as a fixed percentage.
That interest rate is fixed for 10, 20 years?
The CDC is fixed for the 25 years. Yep. The bank portion then is typical to the whatever the bank wants to structure on their loan. So, you know, they can do a 20 or 25-year amortization, you know, for Foothills, and then I'll let David kind of go through what they would look, you know, for Foothills, and this is, I'm saying, just a carte blanche structure, you know, without knowing anything. The generic structure on that would probably a 25-year amortization, 10-year term, probably a 5-year reprice built in to that, and starting rate ballpark 4.5.
I was gonna say, I know National Bank has it, and I think lots of other banks have it as well. For the medical community, they can often do 100% financing on owner-occupied real estate because they do a, you know, small practice loan for the 10 or 15% down payment. So effectively, it's, you know, zero down per se. And one thing that Todd was saying too about industries were hit harder than others, you know, being the hospitality one, you know, those industries are getting 3.5 times payroll versus the normal 2.5 times payroll for normal type businesses. Or if anyone has any other questions specific about the payroll program or.
I don't know if this is in your area of expertise, I don't know if it was covered, but there was a lot of discussion about whether that money's gonna be taxable. And if you use it for payroll, they were saying you couldn't deduct the payroll if they gave you a loan for your payroll. Did they figure that out in the second CARES Act?
This is my disclaimer, who confirm with the CPA.
Yeah, of
There's
course.
definitely not a CPA there. To my understanding is they are going to allow you to write off those expenses. So like your W-2 expense, if it was $100,000, you know, initially they were saying you weren't going to be able to write that off. I believe they did pass it that those expenses would be allowable to be written off on taxes.
And
Like
your
they
loan
historically
that's
would be.
forgiven, is that income?
Again, double check with the CPA, but I don't
You don't
believe so. I think you kind of, if you got a PPP loan and it's 100% forgiven, I think you're kind of getting the best of both sides.
It's a wash, yeah.
Huh,
So, another, and this is for people, if you know anybody who owns a business like this, or you sit on a board, they did pass in this most recent act, what they call a shuttered venue grant. And it's designed mainly, you know, theaters, museums, they had a venue operators,
live venues and
promoters,
stuff.
theatrical producers, live performing arts organization operators, museum operators, motion picture theaters. If anybody is a talent representative, this grant for shuttered venues allows, say, a museum to apply for it, and it's truly a grant. And I think what they're trying to do is work with these people, because this isn't going to be held to the same requirements as the PPP loan, which still has that 60-40 breakdown between 60% minimum for payroll and 40% being utilities, rent. They did expand it this year, or this second round, to allow for, and I would be shocked that anyone could utilize it here, but for any damages caused to property because of certain events out there. Yeah. So, so they did expand what that additional 40% could be utilized for. But this, you know, I've had a few entities that are, you know, in the museum or theatrical presenting, and I said, hey, you know, if you go look at this is truly a grant. You don't have to do the forgiveness application. You don't, you know, it's there, done, and you can use it for almost any operating expenses. So.
And who, I apologize, does that come from, do they talk to you all?
So the only time that the only program that the bank is really involved in, or the banks are involved in right now, is the PPP loan. So they did re-extend, or they extended the EIDL, the Economic Injury Disaster Loan Program. That's been extended through the end of this year. The shuttered venue grant, that's a new one. Those are all done through the SBA, right through their website. really the banks were only involved on the PPP side, and that's enough. That is plenty enough. Let's see here. Let me flip through the notes here.
Well, I have a, go
No,
figure,
you
go
don't.
figure.
No, you don't.
Well, the burning question, and people I've spoken to are like, well, how are the banks making any money on this? Because they don't get on the PPP, it's forgiven, so you guys don't get the interest rate there. I mean,
Well,
is it just a
the
big?
interest starts accruing as soon as the loan is funded. So we do get, and it's a whopping 1% on these loans. So it's nothing to write home about. But there is, and it's out on the SBA website, is how the banks are being compensated by the SBA for the program. So we do make a percentage based on the loan amount.
So it's
that
okay
the
then?
SBA
It's not
is
just
paying.
like a huge, a huge pain?
No. And like David was saying, you know, when we did the first round at Foothills, we were, you know, it was 7 days a week, 10 hours a day for 3-4 weeks. And the ability to actually just be able to get that money out so quickly and help people. I've never had so many business owners actually call and thank me personally for being able to get
That's
money out.
nice,
So,
yeah.
no.
But yeah, like Todd said, it's strange that it's, there's not as much of a demand for it this round, which you think if it's forgivable again, you'd think people would be all over it.
Well,
but
you know, it seems too good to be true, and so you got to figure
yeah,
what's the.
maybe it'll increase as it gets more towards March, as more people are catching on.
And, you know, it's been interesting because we've had, you know, as soon as we kind of saw what the potential eligibility requirements were going to be, you know, we had people calling, we're like, hey, you know, you got to show this 25%. And, you know, probably 25% of the people who have actually reached out didn't qualify. And I had not received a call from a customer I had helped in the first round who has a restaurant down in the square. And I called them and I said, hey, are you wanting to apply? And they said, we only saw a 22% reduction. Wow. And he said, you know, because I don't know if I'm actually happy about that or sad because I can't apply for the second round. He goes, but we didn't do as bad as we thought we did. So
That's a good sign too of the economy in general.
That is a good sign.
But it was interesting because, you know, I always chat with all my borrowers and operators and stuff to see how last year it ended and what this year was. And depending on the industry, a lot of them were saying they were almost having record years.
Yeah.
That, you know, really anything tied to the construction aspect, subs, anything along that line, you know, everyone I talked to said, no, we're doing great. So.
Well, that's good news.
Mhm.
Yeah. So, but if it's your first time getting a draw, you don't have to show a reduction. You just come and say, hey, can I get the money?
Do anyone know people that have gotten these PPP loans, or have any of you gotten any of the PPP loans? Or?
I know,
You know people, yeah.
I know people.
Have you heard any good feedback or bad feedback or?
You know, it's laborious is what I
Yeah.
understand,
Mhm.
you know, especially if they've got, you know, a lot of
Other
the
stuff going
businesses,
on, yeah.
3 locations and employees
Sure.
and, yeah.
Yeah.
Just that, oh, I can't come, I have to go, you know, work 3 hours on my PPP.
Right,
you know?
right, yeah,
So that part of it, but, you know, grateful,
sure,
just
Yeah.
the same.
right.
And that was the initial thought process behind doing like an instant forgiveness or an attestation. That was the thought process with the rumblings, was because, and again, I haven't seen the full simplified loan application for loans under 150,000 or less for the forgiveness. But if you had a $500,000 loan, you have to supply everything of every payroll report that you can. You have to supply all your quarterly filings. If you used any of the funds for utilities, they were wanting canceled checks matching to the utility bill. I mean, they wanted to see where every penny went to. So
Government programs.
yeah. So yeah, I had a few customers say, man, it took me 5 hours just to put this application back together. It's like, you know, and we feel bad, you know, unfortunately, there's nothing we could do.
Well, they got $500,000.
Right, well, yeah, yeah, you know, and I think more of it was just like, you know,
Grateful, but it
yeah.
was stressful.
yeah, like you're saying, there's the more,
Yeah.
the labor side of it,
Yeah.
you know, and that was the thought was, you know, a lot of these small businesses, and especially in our market, a lot of businesses don't have a separate controller or CFO who has all day just to focus on something like this. So the thought was like, hey, majority of the businesses that got 150,000 or less are your mom and pop stores, where one of them is handling the books, maybe the other one's doing the day-to-day activities. Well, they don't have time to sit down and do this huge application.
Because they're still trying to run their business,
Yep.
keep their employees, keep their customers, even though they can't have their customers. You know, all of that is still, so it's like I said, she's one in particular grateful, but at the same time, it's just, yeah,
It's a lot, yeah.
it's a lot.
And unfortunately, that's one of the things that I see and that I hear from other bankers processing the PPP applications at least. That's one of the things that we don't have the correct documentation, you know, like they load stuff in the queue and then we have to go back and send them a list to say, you know, this is exactly what we need. You know, that's nice that you sent this, but we need exactly this, that, and the other thing. And so then you have to wait for them to send you this, that, and the other thing, and then you can process it. But
So if we have a buyer that wants to try to take advantage of the new SBA rollout on the with forgiveness and all, or not forgiveness, but with the payments made and all that, do we go into your bank and sit down with you guys? And
Yep, 7A.
Probably have to go to his garage.
Yeah.
Yeah.
You do it online.
Basically, yeah, we've been banished to our home since November 15th, I think, is when we were said. So this is actually the first time I've worn a collared shirt.
looking good, looking good.
Luckily it was Friday, I could still keep my jeans. But, you know, in regards to the 7A and even the 504, it's really handled just similar to a commercial loan in regards to, you know, get your clients to us. We'll have the conversations with them. Financial package is basically the exact same, except for about 20 more pieces of documents for the SBA side. If it's a 504, then once we have the initial conversation with the customer, then we set up a conference call with one of the CDCs. We just had a new CDC open up down in Phoenix. Probably a lot of you, I don't know if you guys deal with a lot of the CDCs, but you probably are familiar with Jeff McGivern. He's been with a CDC, BDFC in Phoenix for a really long time, and he actually just moved to this new company that just opened up at the end of December, beginning of January. So, but in regards to that, the SBAs are all done directly with us.
yeah, a lot of it can be done
With us on the Foothills, I'm not sure on
yeah.
national.
Yeah, same thing. And I find it kind of funny that at National Bank, we're in the office, which is because at Wells Fargo, we were banished to our homes too. And I was working out of my garage. Someone said, you meet in your garage. But I forget what else I was going with that.
Where do you go to talk to somebody?
Oh,
about
yeah.
getting the-
So, you know, so a lot of it can be done over the telephone and over email. You know, we talk and go through the steps, the process, all the details over the telephone or in person, you know.
Yeah.
And, you know, then we can email a needs list with all the documents needed and all the forms to fill out and those kinds of things. And it's just, you know, like Todd said, it's just like a normal loan application, except 20 more pages or so. Any other questions or anything?
Yeah, how long's the loan process taking? Is it longer now?
The typical SBA loan, you mean?
Yeah.
I wouldn't say it's.
I wouldn't say it is, but there's always that caveat of the PPP, because the SBA is also overloaded with the PPP program. And the second round, they appear to be, I always laugh because we always hear about, hey, they gave $285 billion for a second round of PPP. Well, they didn't leave out that they gave $50 million more to the SBA for them to do more auditing of the loans. So this round is taking a little bit longer from the time we receive an application to getting the PPP out, because now the SBA is actually reviewing everything, where first round, we would just really ping their system and they'd say, hey, yep, here, you're allocated those funds for that borrower. and move on. Now it's like a 24 to 48 hour turn time with the SBA. So anytime you kind of start filling in their side, that slows up some of the other processes too. So, you know, we're this 504 we're working on right now. They said, you know, 45, 60 days, just depending on the, you know, some of the other hiccups that might come up.
Like appraisals.
Yeah, we were seeing, you know, another thing that we're running into, and I don't know about National Bank, is, you know, just on any commercial deal, not just the SBA's, was appraisals. There's such a huge demand for loans towards the end of going into that fourth quarter of last year that we had some appraisals that were taking 5 to 6 weeks just to get back. And that's, you know, the credit portion is 5 to 10 business days, depending on how complex the request is. And then you got this month plus of waiting for the appraisal to come in. So, but typically 45, 60 days, depending on the deal.
And yeah, I haven't heard that things are really backed up because of the situation or anything now. It seems to be moving along at normal speeds.
So I know you're not an appraiser, but ordinarily the bank would look at last year's income on the property and make sure that you have the debt service coverage ratio that's required. And since 2020 was such a horrible year for some properties, do you give that one a pass, or how do you?
So,
Good question.
yeah.
Thank you.
So the structure of the SBA or the bank side loan has not changed. None of that aspect was included in the current bill that was passed. So the underwriting is still the same. We do have to take a look into 2020. You know, I think that's a reason. I think that's the reason they did increase the guarantee to 90% to help give the banks the more warm and fuzzy feeling of the guarantee. But they're still loans and they still have the chance to get audited, and external auditors like to look at that and they say, well, you just made a loan to a company that just showed they couldn't pay you back.
Right.
You know, and we're still on the hook to say, well, here's why. So, you know, we do have to look at 2020. And if there's a drop in the revenue, as long as there's still probably the cash to support the proposed debt and the existing debt, you know, it's going to be there. But we can't just say, oh, you know, you had a 0.50 debt service for last year. We're just going to throw that one out because of COVID. We still have to address it.
An investor wants to purchase a property. Oh, it has to be okay. So an owner wants to purchase a property that is currently a restaurant, and they were doing well up until 2020, and then they crashed in their revenue. So how do you just go, no, get out of my office, or?
Well, we were saying no, get out of our office. Yeah. Give Dinerman's business card. Kevin's not here. Kevin Schleer's no, I mean, we'll look at it. Right now, hospitality requests are very difficult because of COVID. You know, towards the end of this year, things might be, hopefully are settling down. Things are getting back to normal. And it won't be as scrutinized. But, you know, if somebody did come in looking to do a restaurant or a hotel right now, and it looked like we had potential to get it done, there might be things where we say, hey, yeah, we want 15% down. We want 35% down on the SBA, because the SBA guideline is on a 504, 10%. But that's SBA. A bank can actually then say, hey, we want more to be comfortable with this deal. So be the scenario, but I mean, right now it would have to be and an operator, you know, somebody who has years and years of experience of running a restaurant, has a lot of liquidity that they can draw off needed, and probably would need more than a 10 or 15% injection.
So any kind of a industry or asset class, I guess, maybe that has been negatively impacted by COVID is still going to have a hard time getting a loan.
I wouldn't say hard time. It's going to be more scrutinized. So however you want to term that, I guess. We like to say
easier.
Yes.
It's easier.
I mean, you know, the first thing, you know, and I don't know why, the very day I went through, for you who don't know, Dave and I worked at Wells, it was almost same length as time as he did, and we both went through the same training program. And the very first day, they say, every time you look at a deal, pretend it's your money that you're lending out. Is this a deal that you would give money to? And so, you know, anytime I look at any credit request, that's my first thought is, hey, you know, would I give this person money to do this deal? So, you know, are we getting deals done for industries that were hard hit? We are. But then again, we may ask for more money down to have more, for them to have more skin in the game in that. So
I was gonna say there, you know, it's in that industry, I think being an existing customer of a bank in that industry with a relationship is a better place to be in than trying to switch banks or start a relationship somewhere else at this particular time. You know, real life examples, you know, we've done a couple hotel deals, again, for customers that we've been able to, you know, refinance and, you know, give really good deals to at this particular time. And then at the same time, we just had a hotel deal come across our desk that we had to pass on because some of the ratios, it was, you know, they weren't really hard hit, but they were hit hard enough to make the ratios, you know, not strong enough for a bank to want to take on a new customer like that at this particular time. But again, for existing customers, you know, with relationships, et cetera, it seems to be easier.
I am actually waiting for a financial package for a partner buyout in a restaurant.
Oh, that
So
was one of my
we
questions.
We are, like I said, we are looking at it. It is an existing customer of Foothills, so we know the track record. We know what the deposit counts look like. Like David was saying, we know the customer well. And from initial conversations, you know, they were hit by COVID, but it sounds like they fared pretty well. So they're working on their financial package, and we will be looking at doing that buyout for a restaurant. Danny?
So first of all, would you guys, either one of you guys let me borrow money?
You?
Yeah, then we will then. Number two is, more importantly, I know a couple people that weren't able to qualify for the PPP program, but they took it as a tax credit. So, and I know, like, I was one of them that took it that way personally, and I got like 5 other friends that did it that way because their accountants recommended it that way. Would that hurt us to potentially reapply for the second round?
Used all your round one funds.
Correct, but that's exactly what the point is that 5 businesses that I know personally, like, did not take that money in, they just took it as a tax credit. So would that qualify as their first round?
If they took the first round of PPP, then they've already done the first loan. I guess I'm not following what.
Yeah, so they weren't able to take the PPP program as an actual loan, but they were able to take it as a tax credit. They were all advised, and that's how I found out about it.
So did they apply for it? I'm really lost.
They applied, they did not qualify for it for whatever reason, or they didn't get the money, it was none of the funds.
So they never received a PPP loan?
They did never receive a PPP loan, but they didn't take the PPP loan, they all took a tax credit instead.
How? On what?
Yeah, come
On
up to
what?
the front.
That sounds like maybe now.
Yeah.
Payroll tax forgiveness and liability on your tax return.
And so what's your question then?
So because they didn't actually get the money as a loan, but they got the tax credit, would they still qualify for the second round without showing a 25% decrease?
So they'd be for a first round.
They would
PPP
qualify for
loan.
the first round, okay.
Yep.
Got it, okay.
So as long as. So they applied, but they were declined for a PPP loan?
So like, one of them was Wells Fargo, and Wells Fargo didn't have the funds to give them.
Okay.
The other one was Chase, same circumstance. The other 2 did not ever hear back from Bank of America at all.
So they applied and never got the loan. Okay. So in that case, as long, to my understanding, because now these are these weird one-offs.
Correct, yeah, correct.
Into, and there's countless ones. It sounds as long as they never received an SBA loan number, or they were entered into what's called the E-Tran, which is the SBA portal that the banks work with, not just with PPP, but all other SBA loans. As long as they weren't processed through that, I believe that they would be eligible for the first round PPP and would not have to show that 25% reduction.
Okay.
But that might be something that's not found out until, because the E-Trans system will tell a bank, oh, EIN number has already applied to, where a lot of in the first round, we're having issues with some of the larger banks, and they're like, hey, it's been 2 weeks, we haven't heard anything, can we apply? And we'd say, sure, and we take it, and it'd get kicked back because they were already put into the system. So that might be something that you don't know until you apply and it goes into that system.
So how we doing, guys? Everybody okay? I'm just wondering, you guys here, how many of you are really familiar with the SBA program? Most of you? I wonder with the limited, could you kind of just real quickly summarize the difference between a 7A and a 504? Can you do that quickly?
We got chalkboard.
We probably don't have to a minute.
Do we have a big whiteboard like you have in college or something? Basically, the 504 can only be used for real estate. If you have a little bit, if you're buying a real estate to put a business in, you can get a small amount for the FF&Es, but really that's geared towards just real estate acquisition. 7A, you can use that for a real estate acquisition, partner buyout, business startup where there is no real estate involved.
More general purpose.
Yeah, more general purpose. You can get really creative too. You can do a 504 and a 7A. So if you have somebody who's starting a business and they're buying a good piece of real estate with a building on it, then you can use the 504 for the real estate purchase and then the 7A for the business aspect. Depending on who you talk to, there's always personal opinions on, some people say, hey, take the 504 option whenever you can. Somewhere in my prior life, I had someone tell me once that there was a kind of a breaking point where the fees of the 504 are offset by the 7A, because with the 504, you have to remember there's 3 parties involved, the borrower, and then basically 2 financial institutes. Well, both financial institutes are going to charge fees. So for example, like I was saying, the one that we're looking at right now, total fees between the 2 of us were about $27,000 for the 504.
What was
then
the
again,
size of
you're
that
getting
loan?
Then you're getting about a 2.6% fixed rate for 25 years. That's a little bit over $1.4 million. And you got to remember, so between those 2, there's about 2% of those fees are going to the SBA that are currently being waived under the new act. So 7A, 7A, real estate and everything else, FF&Es, equipment, business purchases, partner buyouts. 504, real estate, easiest.
And I think sometimes it gets confused is that the SBA don't loan any money, right? The SBA doesn't really loan any
No.
money.
Right. They're just
You have
supplying
to
the
have a bank
guarantee.
that's hooked up with the SBA.
Yep.
Any other questions? Okay, David?
If the 504 is a 25-year amortization, is it assumable, and is there a prepayment penalty if you pay off early?
So that's the CDC side of the loan. So I don't know much about their inner workings. I believe, and don't hold me to this, I believe the CDC, the debenture portion, has a 10-year prepayment penalty structure, but I could be off on that. I don't know. I rely on that party to.
But there is some sort of a prepayment period.
Yeah.
But that goes away.
And on the 7A, the banks typically require another, like a second on a personal property, or, assignment of life insurance proceeds. Does that ever come up?
It does.
I was just gonna say, we see seconds on properties quite a bit. you know, if they've got equity in their property and the deal needs that, they'll take what they can get pretty much.
A lot of it comes down to the deal itself. And usually it's only on a set, we'll ask for that type of additional collateral. Where we see it the most, and it did happen, actually we had a borrower, we did a loan for them at the end of 2019. And they wanted to put 10% off, they just want to do a nice straight 7A loan. And so they put 10% down. Well, the SBA, you know, that's the minimum, 10%. But typically, if you can get to the 15%, sometimes that secondary collateral will go to the wayside. And so in this case, they want to do 10%, and they're okay with the SBA taking a second on their personal residence. Well, then they came back just last year in July, so July of 2020, and bought a piece of property adjacent to their current location. And again, they wanted to keep it at a 10% injection. Well, of course, SBA already had a second on their personal residence, so they said, hey, we want, you know, you already have life insurance, so we're going to take an assignment of your life insurance. And there's a calculation. It's not like, hey, if you have a $1 million life insurance policy, they take the full $1 million, they back into it where they get what they consider 100% collateralized, even though the property, we'll say, is 90% loan to value, that they shore up that 10% difference to get to 100%. And that's, you know, in this case, I forget what the life insurance policy was for, but they only took an assignment of $40,000. So yes and no, to answer your question, David.
They have the ability to,
Yeah.
which a lot of people don't like.
And if they do, a lot of people think if they do take that second, that they can't do anything with that house. You know, if they want to sell or move, typically it's really easy conversation with the SBA. I won't say how easy, I'll just say it's a conversation with the SBA that, hey, I'm selling, I'm buying a new house. And sometimes what they'll do is release that second and just take a second on the new home, or depending on what's remaining on that loan amount, it might be possible to say, hey, you know, it's been 10 years, they paid down $100,000 of principal, and we only had $40,000 of the assignments. So really, we're probably collateralized now, so they may even just release it. So,
and I've seen that happen too, where they release like a lien on a house.
So just because they have that lien doesn't mean you're locked into that house for the life of your commercial loan. Sell it or do anything with it. The SBA will work with you to reallocate it to another house if needed, if you sell.
Okay, guys, we're kind of running over. But thank you so much for